for the content. Advisory services offered through Blackridge Asset Management, a registered investment advisor. Securities are offered through Peak Brokerage Services, LLC. Blackridge Asset Management is a separate and independent entity from Peak Brokerage Services, LLC. Member, FINRA, SIPC. And now, Today with Denny, here's Denny Artachi.
Good morning. Another beautiful day in South Florida. I want to welcome you today with Denny. And how's Mr. Evan doing today?
I woke up vertical. I'm feeling great. Was sick the last day or so. But
Really?
today, yeah, it all caught up eventually. That happens every now and then.
You're just doing too many things,
Burning
man,
the candle
as usual.
at three ends instead of two. Yeah.
Do you remind yourself to shave every once in a while, or is it kind of a sexy thing that you're going for?
Here's the thing. Nobody sees me Monday to Friday. All they do is hear me.
Okay.
They hear me at the stadium.
Right.
So nobody has to see me unless I do a wedding on the weekend. So I have a wedding Saturday. So I'll be all, you know.
Yeah, I know. When I've
like
seen you when you DJ'd out, you're dressed to the dimes and everything, and you're doing your thing.
Yeah.
Well, okay. Well, I noticed that the heat is back, my friend. Those cool temperatures are gone.
Yeah, we're done.
These people that were complaining just a few weeks ago, I think it was a few weeks ago, we still had a few. How do you like it now? How do you like walking outside when it feels like 150 degrees? I mean, 90 hurts right now.
Yeah.
I can't.
It's painful.
On weekends, I'm done with my yard work or anything by like 9:30, 10 o'clock.
Mm-hmm.
I'm pushing it after that.
Yeah, so, get up at the time that I get up in the morning. You walk outside and this like wall hits you of humidity at 4:30 in the morning.
Even that early?
Yeah, it's brutal at 4:30 in the morning.
So you felt it the last few days,
yeah.
like I'm saying,
it's crazy.
Last couple weeks.
Yeah, it's crazy.
All right. Well, hey, my friend in Buffalo said he was going up last week, and it was somewhere like in the 40s. And I'm like, hey, that might be pretty cool for a few days. I don't know. Lots of things. I'm a little groggy from rehearsing last night, getting ready for the Santana show, which is going to be a week from Friday, which you're not going to be there, Mr. DJ, because you're going to be making money.
Yeah, I'll have an event that I'm doing. I really want to come out and see one of your shows, and I want to see Michael Washington.
I told Mike Washington, you don't care. Money.
And
rules.
I found out there's other people that we have mutual friends in the musical world. Debbie Taft, saxophone player.
Oh, really?
Yeah.
Okay. All right.
Yeah.
Well, how do you know all these people?
From back in the day, I used to DJ in the clubs down in Lauderdale back in the early 80s through the 90s. And these people,
you all were together.
We still talk to this day.
Well, it's nice to have old friends. One of the greatest compliments happened to me, I'm going to say 2 days ago. There's a person I know from high school, and we played music together for years and years. And he's been in Los Angeles, and I think we touched base with each other maybe 5-6 years ago. So he friends me on Facebook out of the blue because he finds the copy of the book that I wrote and sent him years ago, but he never read it. And you know something? He was going through a lot of hard times. In fact, one of his friends committed suicide. He contemplated committing suicide.
Oh, wow.
So he finds my book. This is why he contacted me. He said, Denny, I read your book, and I cannot, you don't know how much it touched me. And I felt like you wrote it for me. And I almost teared up because what greater gift is there besides playing music that you can write a book that really helps somebody to stop from committing suicide or, doing just thinking that life is just a total bummer. So, if you'd like to read the book, anybody out there listening, it's called Thoughts to Live By. It's on Amazon. I have talked about it to students. I don't sell the book. I wrote the book personally because me, I'm a happy-go-lucky kind of guy, but I got to tell you, I've had a lot of bad things happen to me in my life. We all have.
Yeah.
Childhood was not the greatest thing. And in fact, some of the things that happened to me, I would not want to say on the air. But what I can tell you is I overcame it. And part of the reasoning for my book was for myself. I had to put down these thoughts to help myself be happier and not be depressive or get into drugs or alcohol to try and mask everything. So that was just a great gift. And I think a lot of what's happening today is common sense has just gone out the window. I saw this article where this gas thing that happened in the last 2 days.
Mm-hmm.
There was this couple just with like 10 gas cans in their truck.
Oh yeah, I've
hoarding
seen
it.
Yeah, it's crazy.
What is that?
It's crazy.
First the toilet paper, now the gas.
Yeah.
I
What's
mean,
next?
I don't know what next is.
Oh, well, you know what there's a shortage of though?
What?
Chick-fil-A sauce.
Chick-fil-A
Yes.
sauce.
Chick-fil-A has limited the amount of sauce they give you now with your meal.
Because people are stealing it.
Yes. There's one sauce per meal.
Don't you think they should figure it out that, hey, why don't we sell this at Publix or something?
They do.
They do?
They do. They sell it in a big white bottle.
I haven't seen it.
It's we get it at Walmart. They have the two different types, the original and the Hawaiian.
I want the original.
It's really good.
You know who else is good? Pollo Tropical. They have those sauces.
Yes.
Why don't they sell that?
I don't know.
They could close down their chains and make money on the sauce.
I know, right?
Then
everybody will be hitting the sauce. No pun intended.
Right. That'd be a different kind of sauce, though. Yeah. I'm going to try a personal thing, too. I'm going to try no alcohol for like 30 days.
Okay.
Because I'm trying to cut weight and clear things out.
Okay.
I think, I've done it in the past. It shouldn't be a problem, but let's see how it goes.
Okay.
I'm trying to cut back coffee, too. I did not have my espresso today. So I'm like, I had iced tea. So I don't know. I've got to do something to deal with the insanity I see on TV. And I don't know if you remember Joe Budd, the president or actually he's a chairperson for the Republican Party. He had such a funny Facebook post today. I had to laugh. He says, I miss mean tweets, peace in Israel, $1.79 gas, and no inflation.
Oh, wow. Wow. Okay.
So
interesting.
He misses the days of Trump. I mean, I think we've touched on it. Trump's methodology and how he went about things probably had a lot to be desired, but his fiscal policies were pretty good. And there was peace in Israel. Gas was not where it is now. And inflation is going to be a problem, folks. I mean, I saw the CPI index, they just released it. It actually was 0.8. They were expecting 0.2. So what does that mean? I mean, I saw on 60 Minutes, I haven't caught it in a while, that the price of lumber is up like 300%. So to build a house, on average, it's costing $30,000 more just for the lumber. See, this is what I was afraid of from a financial fiscal standpoint. We're printing so much money out there that hyperinflation is knocking on the door, and the price of everything is going up. Guess what the average price of a new car is right now?
I'm going to guesstimate, probably 30 in the low to mid 30,000.
Okay. 40,000 is the latest average new car price.
Oh my.
Yeah. Wow. So you're looking at that, and gas it's $3.20 something now, when it was $2 or less about 6 months ago, was it not?
Right. Yeah.
And I'm not making this up.
I remember when it got down to $2.02 a gallon.
Right. So, I mean, this is. I know the market had a sell off the last 3 days, and I think part of it is the inflation woes that are happening, and the Fed kept rates where they are, but they're going to have to raise it probably pretty soon to start paying the tab, because again, I've said this, we're printing money like drunken sailors on shore leave. It's got to stop. I also read and saw that more people are benefiting by staying home and collecting benefits than going to work. There's a shortage of workers out there. I mean, they're offering bonuses at McDonald's, and when, these fast food, they have signs out there that they'll give you a bonus if you sign up to work.
Hundreds of dollars.
Yes, $500 to $700.
It's crazy.
Now, folks, this is where common sense is going out the window. If you want to talk about what you think, please call into the show. It's 220-WSTU, because I'm scratching my head looking at some of this going, man, I hate being right, but I was afraid of this. I was afraid of inflation kicking in. People rather stay home than go to work. I mean, but honestly, what are they making? Are they're making like $600 a week? Some of these employment benefits.
Yeah, because you have the kicker. You have the $300 kicker in there.
Okay.
Plus the maximum benefit amount is $280 a week.
Wow.
So you're making $580.
So you could make that much money just sitting home watching CNN.
Yeah, pretty much.
And how long is it going to last for?
Until the governor signs off on that $300 kicker that's going right now.
Which some governors have already done that around the country, right?
Yes.
Because they want people to go back to work.
Yes.
So this has got to be terrible for business owners because they can't find people to go to work. Mm-hmm. Well, listen, we're going to take our break right now and come back on Today with Denny. All right, I'm back on Today with Denny. That seems enticing. But I can't collect unemployment. I'm self-employed. I have my own business. Yeah. Nobody cares if I don't go to work.
Yeah.
But man, that would be a sweet $600 a week plus doing a couple of gigs. Mm-hmm. I don't know. I also recently paid my tax bill. Ouch. I'm still bleeding from that.
Are you?
Yes, I am bleeding.
Now, when you say your tax bill, are you talking about
self-employment, my personal
self-employment?
Yes.
Okay.
And let me tell you, I'm scared. Rates are already creeping up higher. We know the corporate rate is going up. Taxes are going up for businesses and things like that. So, but as I'm looking at all these things, prices are rising and rising. And that's what's really going to be terrible for us in the short and the long run. We're going to have a guest pretty soon, John Thur, who runs a division for a private wealth management. He's a very smart fellow, chartered financial analyst. And he's going to talk about, I want to ask him about what he's doing for clients looking for yield. Because look, we had a 3-day sell-off in the market. Now people are starting to say, hey, well, maybe this isn't going to go straight up. Because as we see these indicators coming in, you're going to have to be smart about your portfolio, folks. You're going to have to rebalance and think about, even though all the indicators show that we should have good growth this year, I think most people feel GDP will be between 6 and 8%. But if they start raising taxes, as they're already starting to do, and as inflation skyrockets, and who knows, I really hope, my heart and prayers go out for all those in Israel right now. It just sickens me to see what's going on there. I mean, they've been at peace for at least while Trump was in, right?
Yeah,
I'm not saying it was all he's the one who fixed everything, but to see it happening and there are other world events that could really affect our economy and the world economy. So this is a good time to at least look at what you're doing, especially if you're already retired and you're counting on that income. John will be talking, I think in about 10, 15 minutes, some of the different things that he's doing for clients to help them out. On the music side, this Sunday, I know you're, who knows what you do on Sundays, right?
Well,
do you actually
wait a
rest
minute,
on Sunday?
I'll tell you what I'm doing. Give me 2 seconds. I have to look at my calendar because my calendar tells me what I do.
Yeah, I don't go to the bathroom unless I check my calendar. It's true.
Let me see. I have church.
Good.
A photo shoot at 1.
A photo shoot.
Another
for
photo
you?
Shoot at 5.
Photo shoots?
2 clients.
Oh,
2
okay.
Clients. 2 clients.
All right.
Yeah, they're two. One is a family photo shoot. The other one's a wedding.
So you're not going to have a day off until what, next week?
Well, I've had this week off from the stadium because the team is traveling this week and next week. And then we have the Olympic qualifying games for the Olympics, the road to Tokyo.
Really? All right.
Yeah. So we got 8 teams coming in from all over the world.
Well, this Sunday at Terra Firmata, the Treasure Coast Blues Society, which I represented them when I went to Memphis last year, we're having a cookout and a party. I'm going to be performing. And, of course, a week from tomorrow, I'll do the Santana show, the tribute show at Terra Firmata. Folks, if you like live outdoor venues, definitely go to Terra Firmata. The one thing that I like, in spite of all the news data that's bumming me out, financially, COVID looks like it's really finally going in the direction we've wanted it to go.
It's turning that corner.
It really is. I mean, I think that they said that death cases from a nation are like 600 a day, which we were I don't. One person dying is too much.
Yeah.
But I think June 1st is officially no more masks in Florida. Correct? Didn't he sign that?
I'm not sure what the governor signed.
I think that's what he
know.
signed. I think where it's effective June 1st.
Okay.
But people are still going to be upset because there are people that are fully vaccinated.
Yeah.
Outdoors wearing a mask and yelling at people who are not wearing a mask.
Yeah.
And they're finding out that if you're outside, the chance of transmission is more like 1%. So I went to Publix the other day and this guy was yelling at a lady because she didn't put her mask on fast enough when she entered.
Right.
And I'm like, look at this guy.
Yeah.
So there's going to be people that are going to be scared to death no matter what. But folks, the numbers have been dropping and dropping and dropping. And thank God for that, because we'd like to all get back to normal sometime sooner than later. And now they're offering vaccines. New York City, you can actually get a vaccine now at subway stations.
Oh, yeah.
As you go there, they're offering vaccines now. So now Publix is also offering walk-in vaccines instead of the appointment.
No more. You can walk in.
That's right. Yeah. You can walk in and get it. So I don't know what the rates are in Florida, but we're definitely the lowest we've been since October, November, and it keeps trending down. And I hope we're going to get herd immunity. I don't know. It looks like India is still in a bad situation.
They're not doing too well.
Because
they're in the second wave.
That's what it is. They when everyone was getting hit hard, India was fine. So it kind of worked its way around to them and boomerang to them.
Yeah.
But the whole mask thing, I do wear it out of solidarity and respect for others. But I still kind of crack up when I see people driving in the car
with a mask
on. With the
windows rolled up, the AC.
Yes. Yeah. And there's nobody else in the car.
It's a little extreme.
Don't you think that's taken?
Yeah.
Yes, exactly. Now I could see if you're driving with someone, you go, well, I don't know if they have COVID, so let me wear my mask.
Yeah.
But folks, they're alone.
Yeah.
With the windows rolled up.
Or how about the ones that wear the mask?
Yeah.
But they're not wearing the mask. It's covering their chin.
Yes.
Just for the sake of having the mask on.
This way, no one can yell at them for not wearing a mask.
Right. Exactly.
Yeah. Yeah. I don't know. But it looks like when Fauci gets on the news and says we're turning the corner and he starts changing what he was saying before.
Yeah.
Hey, that we're closer to the finish line of ending it, or at least getting some kind of normalcy back. Thank God. So many people, so many of us have been suffering from all this. And do we have a caller here? I think he's calling. It's someone who caught me not wearing a mask while I was driving.
No, it's your friend Charlie.
I have a friend?
Yeah, it's your friend Charlie. He's on the line.
Charlie, are you there?
Yeah, I'm still here. I woke up this morning, so I know I'm here. I am here because I'm here, and my dogs are here, so I know I'm here.
Well, that's
but anyway,
good.
I have decided that I'm going maskless. I was double shotted in January, Moderna.
Okay.
My wife got Pfizer, so she's better than me. Well, that's what a wife is, right?
Absolutely.
Better than her husband, So, and actually, she's my go-to computer lady.
So, Charlie,
I hate computers. I'll go back to the 19th century if she passes away. No, I've told her that. So, and I'll probably be happier because now I'll be the best.
You are?
And, if my wife passes away, because I know I'm second best right now. So if she dies before me, I move up a slot, but I'll have to go back to the 19th century because I don't understand computers.
So you're going maskless.
That's why I called, actually. Thank you for bringing me back. Yeah. Lead me by the hand there, Evan. So anyway, Denny and Evan and the rest of the gang, I decided probably 6 weeks ago. I showed up at Lowe's because they give the military discount. Now Home Depot decided they gave in too. They do that 24/7.
Wait, can you go into Lowe's, Charlie? Can you go into Lowe's without a mask?
Yes. I did.
I didn't.
Many people are.
They have a sign though. They do have a sign up that says masks required.
Yeah.
No, I don't think so, Evan.
Oh, they took it down? They took it down?
I follow the rules, brother.
Okay. All right. I know Home Depot has their sign up still because I was there the other day.
Well, maybe Home Depot does, but
Lowe's probably
I
took
can
it
tell
down.
you a story about that. Can you imagine? I'm driving in the parking lot behind this guy. He stops at a stop sign. Yup, that's what you're supposed to do. His wife gets out, and I'm politely waiting.
Yeah.
He still stays there. She grabs a cart. Now I realize why he stayed there, and I'm behind him. So I beeped him. Beep. And he didn't move. She walks slowly across the parking lot in front of her husband's car. And he moves, so I moved. And then I told him what I thought. That was very nice of you, but it was very rude. You didn't follow the rules. Whatever. I tend to speak my mind, Evan.
What now?
So
if you're at a place, right, and you're going maskless, brave man, like he's in the jungle of Vietnam or something.
Tarzan.
Right? Exactly.
That's where I was.
Brother. I know you were. I know.
Lots of shots.
So what are you going to tell someone when because I was at Publix the other day and this guy was yelling at a woman because she didn't put her mask on fast enough.
Well, I think he's being rude. I would actually say, sir, this is America. I'm on Team America. And if you have your shots and all of that, let's follow the science. Don't be yelling at somebody. You're spreading your germs. I had a person sneeze on me.
Really?
When I was flying.
Okay.
I always pick the aisle. Being a senior, you like the aisle. And this guy comes in and he's standing because there's a big line, when you're boarding a plane. And the freaking guy sneezed right on top of me.
Didn't cover himself.
Hell no. Well, sorry. No, he did not. And
the delay's not on.
Back then, I guess I was under control, or I would have probably told him off.
Oh, well.
As you get older, Evan, you open up a little bit.
Trust me, I know. I'm there with you. I definitely know.
You know what it is?
An attractive younger wife. My wife is 11 years my junior.
Oh, wait a minute now. Hold on, because my wife is 16 years my younger.
Well, I had a girlfriend that was 17 years my junior.
Oh, okay.
And she wanted to make babies. So I said, no, I've done that already.
Listen, what is it with you lecherous dudes out there? Do you have like stock in Viagra or something? What's going on here?
All right.
17 years younger?
I'm invested. And actually, a few days ago, before the market dropped, I contacted my financial advisor, who shall remain nameless. And I've been with these people for over 30 years. And I said, take over my account. I was 165% up on my account. He was doing 38%, pretty good. I was the more aggressive. So I contacted him yesterday. Let's go to cash eventually a little bit. Come on, skim.
So you're the reason why the market had a sell-off, huh? See, Charlie.
Really.
Charlie.
I bought Microsoft at 25. I'm up like 600 and something percent. And I don't like Bill Gates' political things, but hey, he squeezed IBM years ago, right?
Hey, he's single now too, so maybe he's going to go for a younger woman. What do you think?
He could buy whatever he wants.
Yeah. Wait, you mean if you have money, women will
candy out there?
If you have money, women will flock to you? Really?
Some, you can always say, walk around. There's an old joke. You just flat out ask a woman, and eventually, if you don't get slapped, that's the one.
Yeah.
So
anyway, my luck, I'd get slapped and incarcerated.
Probably, because today's, you could say, I feel like a weeping willow. Hey, let's, become a grove. All right, I'm going to let you guys go because I'm having too much fun.
Always a pleasure, Charlie.
I charge $100 an hour for entertainment.
All right, well, you be sure and call next week and give us a discount. All right, Charlie?
Well, $50 off, maybe.
Maybe
he could be your opening act.
He could be yes, he could be. Yeah, I think he could be.
Yeah.
All right, Charlie, thanks for calling. We're going to take a break and come back on Today with Denny. All right, we are back on Today with Denny. I'm excited about my next guest. I think, John, are you on the line?
Yes, Denny, I'm here.
Awesome. Folks, this is John Thur, a chartered financial analyst. Let me tell you, when he speaks, people stop and listen. He's been doing this. John, how long you been doing this? Over 40 years, right? Something like that?
Yeah, something like that. I started in kindergarten.
That's right. Yeah, they had child labor laws, but John helps run Independent Solutions, a great money management team that I'm happy to be partnered with. But John also runs this new private wealth division that, folks, you typically need, $50 to $100 million to get the kind of services that John provides. And I want you to talk about what you do. But John, the first thing is, obviously, the market's been getting crowbarred a little bit because of inflation. I talked about it on the show. I think inflation is showing the highest spike since the last 12, 13 years. I mean, what do you think about that?
Well, that's a good point to bring up, Denny, because it is the focus of the market now. And I think where we bring value in the years I've been doing this as a trader, as a research analyst, and a portfolio manager, both on the stock and the bond side of the market. How do you interpret this? Okay, and that's what's critical. What I look at, Denny, is the fear right now is that there's about 10 countries in the world, their central banks have either started to raise their short rate or they have tapered their buying of their sovereign debt. And what that means is, for example, the United States right now, the central bank is buying the debt of the Treasury. So our government runs a deficit. They turn around and borrow money to pay for that deficit or to fill the gap. And it typically goes to the market, and the market says, okay, we'll take that debt for X percent. Well, the Federal Reserve has come in and said, we're buying that. Don't worry. You guys go invest in riskier stuff. We're buying that debt. Well, they're holding the rates artificially low by buying the debt. So when countries stop or slow their purchases, that gets the regular capital market more involved, and they have to take on and buy and absorb that debt. So we're going through this period now where they're trying to return the risk determination to the market instead of letting the central banks do it. So if our Federal Reserve starts to taper, which means instead of buying, 120 million or billion bonds a month, they buy 80 billion. That means the market has to absorb the difference. Thereby, I believe rates should go higher. That's what the market's worried about.
I mean, the
the
have
Fed
to.
has
They
been
have
supporting this way too long.
Yeah, they have to. They have to start. And I think I had Paul on the show, Paul Meeks, and his thought process, like many, was, well, of course, it's so cheap to borrow right now. That's why they're doing it. But that could start changing soon, right, John?
Well, here's the way you look at it, Denny, or I look at it. I think the 10-year Treasury, historically, over my career, you'll price the 10-year at GDP growth, which is about 2%,
right,
plus inflation, which has been about 2%, and a premium of, 0.5 to 1%. So the 10-year should be somewhere around 4.5 or 5%.
Exactly.
But it's 1.6.
Right.
So if the 10-year were to go to 2.25, which is where I think it can go this year,
okay,
that is not high.
No.
Relative to where the economy is. So I don't think a 2.25 10-year will hurt the economy, but it will hurt hard assets, stocks, bonds, homes, real estate, things of this nature, have exploded to the upside because of low interest rates. So you'll see some, selling, or I shouldn't say that. You should see some correction in the price of assets, but you shouldn't see the economy get hurt. So if we don't think the economy will be hurt, what should we do? Well, when the assets come down and they reprice lower, I'm going to be buying. I'm going to be buying things that with new money that I'm getting that I haven't been buying because they've gotten too expensive.
Do you think
so?
GDP...
I believe the economy will continue
Yes.
to have a decent year over the next 12 months or so. But I do believe interest rates on the long end will go up a bit. and we'll have to see, what the Fed does. But I don't think they'll react on the short end to it.
You think GDP? Most people feel it should be between 6% and 8%. You think that's a pretty good guess?
Here's the problem with that, Denny. Everybody's freaking about these numbers.
Yes.
I really am not paying attention to any of these economic numbers.
Okay.
To be honest with you, because last year we had a pandemic, and the second quarter is going to be even worse than the first quarter. By that, I mean the numbers are going to look outlandish relative to last year.
Of course.
What I'm doing is I'm looking at the numbers relative to 2019.
Gotcha. Right.
And a lot of my companies that are reporting earnings this quarter have done well, and their earnings are up substantial
compared to
over
last
the
year.
previous year.
Right.
But not many of them have eclipsed their 2019 sales or earnings. So you got to keep this in perspective. And you can't look at relative to last year's second quarter, which they're going to do again when the second quarter of this year is compared to on all the economic metrics and all the earnings and sales metrics. You kind of got to go back and look at where were we in 2019. 2019, Denny, we had an oversupply of everything. There was no inflation pressure because we had more supply of everything than we had demand. Why is that, Denny? Because we've kept interest rates so low, near zero. We've kept a lot of zombie companies alive that shouldn't be alive.
Yeah.
And there's just so much supply of everything, and there's no pricing power. So now all of a sudden, you're seeing the prices jump up because we had a bottleneck, because we shut down production for 3 to 5 months. And now we're getting a demand buildup where the supply hasn't come back online, because that's what they were waiting for, to see where the demand or when the demand would come back. That supply is going to catch up, Denny. And this whole inflation thing, I think, is going to subside, and we're going to be in a different place 6 to 12 months.
So you don't think the inflation will be hyper or spike out of control? It's just kind of catching up relative to last year. That's kind of like
temporary, in my opinion, due to a bottleneck of supply.
Okay.
But the demand is still not what it was in 2019.
So the demand
and in
is
2019, we didn't have inflation pressures or a lack of supply.
Okay.
So that's where I'm going with it is, you got to keep it all in perspective. And we're just in the midst of a very difficult time. We're coming out of a pandemic when the government shut everything down pretty much. And now we're trying to open up. And there's going to be a dislocation between supply and demand for a little bit.
So, John, obviously you're not bullish on bonds, right?
Yeah, not at all, Denny. I haven't been for probably a couple of years. I think it's a dangerous place.
So what do you...
I think bonds are probably more dangerous right now, or risky than stocks. And I've pretty much stayed extremely short in my bond portfolios.
So into private wealth management, and again, this is not for everybody. This is not for the $40,000 a year person. But what do you... People looking for either yield or safety, they don't want to do equities. What type of strategies are you doing? Because you're not buying bonds. I get that.
No. Well, I'm not buying in the public market, Denny. I'm buying bonds and notes, but they're in the private market.
Got you.
There's a private market out there where capital is raised through a private means and not public.
Okay.
And what happens with private deals is you give up some liquidity. Whereas today, if I had a bond like a GE bond and I needed cash and I wanted to sell it, I could sell it.
Mm-hmm.
But with the private market, you get in and you commit, and you're in for the duration. So if I buy a 3-year note,
okay, I'm
in for 3 years.
Okay.
Okay. So you're giving up some liquidity. And what I'm doing with my clients who are high net worth individuals of, $1 million and up, and most of them multi-million, is I'm taking the bottom 20% of their assets. These are assets they're never going to touch.
Sure. And
I'm committing those to private deals. Why? Because in the private market, the risk reward ratio is far better than in the public market. The public markets have easy access, and therefore a lot of capital is flown into those markets, and they're way overpriced, I think. And because of that, I'm trying to get my clients' portfolios into a lower risk profile with a better return. So, for example, I can do a 3-year note. Okay, it's a tax lien. note, backed by tax liens, and I can do 7% for 3 years, 6% for 2, and 5% for a 1-year commitment. I can also do a note on a real estate project in Austin, Texas, one of the fastest growing markets in the country, from a developer that I know very well and have done business with before, and does a great job. And I can do a 3-year note there for 10%. I can do a 2-year note at 8%, and I can do a 1-year note at 7%, and I can even do a 3-year term for 6%.
Those are great rates, John.
I've got some options.
So the first thing that people are going to say is, well, John, how safe is my money doing in this? And your response would be,
I think I spend a lot of time, Denny, as you know, researching these things.
Absolutely. Yes.
And knowing who the players are.
Yes.
Knowing their strategy, looking at the probabilities of their ability to complete their strategy, looking at what's backing these notes.
Sure.
And then determining whether my clients are getting paid to take the risk. And what I try to do is boil it down to basically the liquidity risk. And if my clients can get a better return just for giving up liquidity, that's a no-brainer. So most of this, there is risk, but I don't believe the risk in what I'm finding out here is greater. It's in fact less than what I'm seeing in the marketplace. If somebody's willing to step up and own a high yield ETF or a high yield mutual fund,
yes,
I believe they're taking far greater risk than the risk my clients would be taking in some of these short-term notes for the return they're going to get.
And isn't that the simple?
People are taking risk in things they don't even know they're taking risk in, or they don't know the amount of risk they're taking. Mm-hmm. When I go to the private market, okay, let me explain to you. When I'm in the public market and I do an analysis on Microsoft, and I boil it down and say, I think Microsoft's worth $185 a share. That's what I'm willing to pay for it. Well, Microsoft's trading at $245. So I can't buy it. Well, right. I keep doing it and doing it and doing it, and I keep finding these companies that are way overpriced. So what do? I either buy nothing or I have to pay more for it. Because what happens is with all the indexing, people buying index-type ETFs or index-type mutual funds, they are forcing the market higher because nobody cares what Exxon's worth. Nobody cares what Microsoft's worth. They just want to buy the index and be involved. So they're pushing up. So my analysis is not as effective. When I go to the private market and I scour through all these deals and I find 2 or 3 gems, I put my time in, do the analysis, and I look at the risk and the reward, and I can determine right then and there if it's worth it, and they're not as volatile. So when the market's going up and down, the value of my clients' underlying assets in these private deals is pretty stable. You see what I'm saying?
Yeah,
so I can add value by doing the analysis. Whereas in the public market, it's hard to add that value because everything's so overpriced because of index.
And I think from a layman standpoint, which I am compared to you, just a layman, it's the simple, like you mentioned, liquidity. People can panic and press the sell button quickly, where in the private sector, that's not what happens. Come on, you know better than I, John, that prices are manipulated up and down by people either overbuying or overselling, seeing something on the news, and that affects often more than basic fundamentals. Isn't that true?
Right.
That's how the market works.
Exactly. You're right. And a lot of it is done with leverage too, Denny. And a lot of it is done with algorithms and programs that these guys run that tell them when to get in and get out. There's no real in fundamental analysis. It's more quantitative right now. Right. And that's what I'm explaining is when you go to the private market, you don't have to deal with any of that. Mm-hmm. There's no options on my positions. There's no leverage on my positions other than what they may have done in the deal, which I know about up front, but there's no outside leverage going on. There's no trading. It's just a stable steady investment.
There's nobody nobody shorting your position because they're still not over their childhood or their bad marriage.
Exactly.
Exactly. I try to explain this.
And I continue to obviously follow these closely. I have a great relationship because of the time I've spent researching them, some of them up to a year. Okay. I've got a good relationship with those people and I follow up and I keep informed on how the projects are doing or, how the deals are going. And I I can stay appraised of what's going on.
So, John, for those who are not well off, because you deal with high net, I mean, that one bond portfolio you ran, that was, what was it, like $1 billion in that one fund that you were doing with the fixed income years ago?
Oh, it was $1.5 billion.
Yeah.
And it was for an institution, and it was pretty much everything that you could trade in the fixed income and own in the fixed income side of the balance sheet. So, that was a great time, and I learned a lot about fixed income, about the yield curve, about a credit risk, and how to analyze all these different types of fixed income deals that are out there. But that's
so
part of my history.
Let's I have many clients who are not high net worth people, because my practice is I want to help everybody who's not a pain in the what. Okay. So what would you say to the average investor right now looking at the market with, let's say, a 5 to a 10-year horizon? Because let's face it, if you're investing in a market, you should never have shorter than a 5 to 10-year horizon, because at any given time, crazy things can happen. So what would you say
agree.
To the average
I
investor?
can't tell you how many people have told me how they got out in March.
Yeah.
And they never got back in.
Never got back
in. And that's that typical sell at the bottom, buy at the top. And now they want to get back in. So I'm trying to guide them and help them. But, Denny, the biggest advice I would give to people is don't chase returns.
Right.
Be a risk-based manager. Find somebody to help you who understands risk.
Mm-hmm.
And then design a portfolio for yourself that is built around your risk tolerance, and don't chase returns. The worst thing to do is look back in history and, this fund has a great track record. The last 3 years, it's really outperformed. Well, that's chasing return, because now a ton of money is going to go into that fund, because that's what people do.
Sure.
They buy at the top.
Sure.
And then all of a sudden the poor manager has to go out and buy everything that's expensive. And then the next 3 years they underperform. And when they do, then you get out. And that's what they call buying at the top, getting out at the bottom. Okay. And that's a horrible strategy. And too many people do it. So what you have to do is go to places that have underperformed, and go to stocks and find the ones that haven't performed yet. And that doesn't mean they're not good companies. For example, like a Nucor, that's a steel company. Now, I was looking at that a few months ago. I've owned it several times in my career. I really love the stock. I love the company. I love the management. Everything they do very well. And they've got a good history, but the stock has not performed. It's not a high-tech stock, and that's what everybody wants now, the instant gratification.
Sure.
And here's a stock that was a great balance sheet, great cash flows, very good business. They're worldwide. They're one of few, major steel producers left. So there's huge barriers to entry. And I bought it between $51 and $57. And it was trading only at 11 times earnings. And great, low price to sales, low price to book. It was just a classic stock, right? And I figured over the next 2-3 years, that if the economy does what we think it can do, that stock should do pretty well, better than average.
Sure.
Well, here it is today at $100 a share. 3 months later.
Well,
so that stock was on its butt forever. But I know how good the company is, and I know I'm buying something very cheap. And all I have to do is be patient. And that's what I do a lot of times, Denny, is I buy things that nobody wants. I know they're good companies, and I just have to wait. So my clients understand that if you wait 2 years and the stock does nothing, but in the third year it doubles, you just doubled your money in 3 years. And that's phenomenal. And that's what I try to do is set my goals on each company I purchase to double in 3 to 5 years.
Well, here's the thing,
those are my goals,
John. When volatility, which looks like it's starting to rear its ugly head, happens, my business typically does better, because let's face it, everyone was a genius the last few years before the pandemic, and that's just not reality. I mean, if you look at what the S&P has actually returned in the last 21 years, it's probably somewhere around 5%. It's not what people think it is. That's taken into account 2008. It always changes. It was at 3.5% for the longest time. But if you compound interest on top of that, my whole point is managed assets and using people like you is a smart way to go. Doesn't mean that you're going to guarantee returns. It's not an annuity. It's not FDIC, but it's like you say, risk reward. Doesn't mean you have to buy high-tech companies. There are a lot of preferreds out there that pay a pretty good dividend. So, folks, if you want to get professionally managed advice, please give me a call, 561-305-8226. That's 561-305-8226. If you are a higher net worth type of individual, that's where John's forte comes into play. And really, independent solutions, John, besides the private wealth, what is the minimum for independent solutions for people to have a managed account there? Is there a minimum?
Well,
I don't remember.
Well, right. What we do, Denny, is there's some minimums, all right, but not many. And the one thing is, if you want to get exposed to my research and my stock picking, or Paul Meeks, or Dave Marriott, or Dan Neiman, we have models we put together.
Yes.
So that for people who don't have a lot of money, yet, and you can grow, and when you do, you can move into the wealth group, but it's a minimum of $100,000 to get into one of our models. And I think that's not a bad way to go.
That's very reasonable. Very reasonable.
My model is more, as you know, of a blend. It's some small, some mid, and mostly large cap. It's some growth and some value, and it's some value that turns into growth. So I kind of cover the whole spectrum, and I'm not performing every quarter. That's not my goal. My goal is to perform on a 1, a 3, a 5, and a 10-year number. And like I said, sometimes I buy things and it may take 2 years for it to bloom.
Sure.
But then that third year it doubles and you get your return that you're looking for.
The return,
and when you do it that way, you do it with a lower risk profile than the market. And you can pick and choose your spots to take risk. And you're not taking the whole market risk. And that's the key. And that's what we do in the wealth group too, is to decide when to ramp up the risk, when to pull the risk back. And most of our clients are wealthy, to be honest with you, and they don't need to get rich. They're rich.
Exactly.
They want to protect what they've got.
Preserve.
They want to participate in the market in a smart way.
John,
so they can sleep at night.
We have 2 minutes to go. I want to thank you. I want to have you back on the show. Independent Solutions does a fantastic job, not just because of the returns, but the service. Folks, you can actually get the fund managers on the phone to have a meeting to discuss your personal portfolio. You just don't get that with most money managers. You really don't. John, thank you, my brother. I will talk to you soon, and let's have you back on the show. John Thur, ladies and gentlemen. I think we have like a minute left or so. Folks, if you're interested in a wealth manager or having a managed portfolio, please give me a call, 561-305-8226. It's a lot simpler than you think. And I think, the key is risk reward. I know people like returns, but I don't know too many people that really want to take as much risk as the market. And that's what I'm talking about. Hopefully you'll come to the show on the 21st, the Santana Tribute. And hopefully Evan will get more than 4 hours sleep tonight. And he's going to shave this weekend. He's going to look great. Thanks for tuning in on Today with Denny. Make it a great day as always. And please stay out of the heat. It's getting hot out there.